Yeah, well, U.S. China clearly is a big issue, and it's something where, of course, the direction of travel, has changed a bit. Things looked at the beginning of the year as though they were getting better, and of course, part of the Chinese deal was to agree to go back to buying large amounts of particularly soybeans and other American agricultural products. During the crisis, the U.S. administration has really ramped up the pressure on China. And it seems, all the political analysis that I've read suggests that this is reasonably popular with both the U.S. political parties, and therefore one can only assume there'll be more and more of it coming into the election. In the portfolio, we have considerable exposure to the digital Chinese consumer. We have a big position in Alibaba, which we added to in March. We also JD.com and Tencent. Now, all of these, are very levered to the growing Chinese consumption story, and I don't think that is derailed. What's happening, in terms of U.S. China, the period of Chinese economy being driven by exports is the 30 years that's behind us. And it's something it really does not affect in any meaningful way our estimates of the value of those e-commerce companies.
Ali, good morning to you. It's Jeff. I just wanted to talk about what you see as the opportunity now. A long list of stocks that you bought when you saw those March lows: Visa, Fiserv, CRH, Intuit. As you look at where we've come to with this, 36% bounce off the March low for many markets, what do you think the opportunity is here? Do you sit on these positions? Do you start to take profit? Do you add? What are you doing with the fund?
Well, I think, as you know, Jeff, we're long-term investors, and we're comfortable with the positions that we have. We are nervous about the overall level of the market. On a very short-term basis, I think what's quite likely and what's actually happening right now is a kind of catch-up trade, because there's been a fairly high degree of consensus about the kinds of businesses that are flourishing and whose growth maybe even has accelerated during this period. And those businesses, and as I suppose the most obvious shorthand for that is how well the Nasdaq has performed compared to the Russell 2000 or even for that matter the FTSE. So I think in the very short term there may be a catch-up of some of those kind of left behind sectors. But if you take a long-term view, we're in a difficult spot here. Markets are quite richly valued on next year's earnings, of course, disregarding entirely this year. And I think the cyclical parts of the stock market, which of course are overrepresented in markets like Japan and Europe compared to the US, it's going to take a considerable period of time before earnings power gets back to where we were just last year. So we think it's particularly important now to be very stock specific in the areas to which you want to be exposed. If you don't have a clear line of sight to sustainable growth over the medium to long term, then it could very well be that today's valuations turn out to be too high.